welcome. My name is L, and today I will be walking you through how to use a profit and loss statement template. So the one we're looking at today is an Microsoft Excel format or version, or it also has a Google Sheets version as well. So it's just a replica of the one that we'll be looking at, or it's identical. It's the same thing, just different platforms. Okay, so you may have come across templates online for various purposes. So the one that we're looking at right now, the profit and losses, to help you as a small business owner, freelancer, self-employed individual, independent contractor, whatever kind of business that you have, we want to help you measure how that business is doing. And the way we do that is measuring if it is bringing you a profit or a loss. Okay, so we are going to be using our own template, like one that we designed, because we know the way around it. And if you are here, you're probably coming from the other video that we made, which was a breakdown of like what is included on the template, like how it's structured, or you actually purchased one of our products and then you came straight to this video through a link. But if you're new and you have no idea what I'm talking about, still you are welcome. So the purpose of this template is to help you as a business owner to save your time. And these templates are actually cost effective because they don't cost you a lot. You don't have to pay a monthly subscription for a software. All you simply need to do is to understand how your business transactions are going and be able to record them whenever they occur, so that you can sum them up in this profit and loss template. All right, so at this point I'm just gonna get straight into it, and since I already explained what all the other tabs are and what they are for, I'm just gonna carry this lesson or tutorial through on quarter one. I'm just gonna focus on quarter one, which is a measurement of January, Feb, and March. And also I'm only going to focus on January because whatever applies to January applies to the rest of the months, right? So what you have here is a full template. Like from your revenue all the way to your net profit or loss. Okay, so you have your headers, right? You have the title section where you can put the company name or logo, and then you also have the report name section where you can put the report name. All right, so we say 1 January to 31 March 2025, which is a representative of quarter one. But obviously if we're at a different time period, then you have to rename this. And the good thing about this, like I said, you can use it for multiple years. So you have the 12 months in the year covered, and then if you want to use it the next year, all you have to do is just duplicate it, and then you have a copy for the following year. All right, so let's get right into it without wasting any more of your time. So the first thing we have, the section that we want to know, is the revenue section. So in this part we measure how your business is doing, like how much money or how much revenue your business brought in. Now it can be in the form of cash, actual cash in your bank. Could be the invoices that you sent out and you're still waiting for the money to come in. But we measure revenue every sale that happened of your product or service. We record it here. Right, so I'm doing this under the assumption, or let me just say I'm doing this like lesson based on the accrual system or method of accounting, where we record every single item in the period in which it occurred, not the period in which it was paid for or when the money was received for it. Okay, so in this scenario we are recording the revenue items in the month that the revenue was earned. Okay, not when the revenue was actually received from your clients, right? So we are going to talk, I'm going to give you an examples here of what it is that we listed here, or what the typical items that you're supposed to put here, right? So for revenue, when we say retainer projects, this is where you work on a project basis. Well, not, yeah, you work on a like project basis. Maybe you offer a specific service. Like, say, let's say you're a digital marketing agency, and then you have clients that you offer your services to. Perhaps you have 2 year, 3 year, 4 year contracts. So the retainer projects would be the ones that you offer on a long term. These are contracts that cannot be easily broken, and so this is guaranteed revenue coming in every single month. So that's where what retainer projects are. They'll probably be the biggest revenue earner for you, right? So the remember also the text here is just placeholder text. So we're not saying like you have to actually use the wording that was used here. You can simply name your revenue items whatever they are. You know, you don't have to follow our naming conventions. We're just doing it to help you understand what it is that you're supposed to put there. Okay, so you put your main income, I mean your main revenue projects here, and then the next thing you then add your other revenue streams, additional revenue. So in the scenario where I mentioned like you're a marketing agency, so you have your services like digital marketing agencies that you're like sorry digital marketing services that you're offering to businesses, right? And then you may have a course that you designed to help other people that are trying to get into this business, or just to help other businesses do it on their own. So maybe you are selling that course somewhere, so you list it as your additional revenue stream. Okay, then you have other projects that you have. As long the idea is to make sure that whatever it is that you are listing here, it's falling under one company, one business. Okay, so that you'll be able to measure how that specific business is performing. All right, so you list everything here that you have. Like I said, if you don't want this wording, you can just delete it and then replace it with your own. Put whatever it is that you use for your business. And then the next thing that I need to mention is that if you don't need any, like the excess columns, sorry, the excess rows, maybe you just need the first row, then you can simply highlight all of those, the additional ones, and right click, and then you delete, and then they'll be gone. Okay, then you delete, then they are gone, right? So the formula, actually before I get to that, so everything else like the totals, the section totals, like the total revenue, cost of goods sold, gross profit, the totals are auto calculated because there are formulas in here. Okay, and then also when you put in figures in this January column, February column, March column, this quarter total, what it's going to do is it's going to sum up the figures in these preceding columns, and then that's the total you get here. Okay, so let me just put that into perspective, right? So let's say for the returner projects you had 25,000, 5,000, right? So you have 31,700. That's your total revenue. You'll notice that I didn't put this figure in, it was auto calculated. Then also the quarter total is gonna look at all those preceding columns in order to come up with the figures in this column. Okay, so that's the revenue part. So let's go to the cost of goods sold. Now cost of goods sold is simply, these are costs that are directly tied to the production and selling of your products and services. Okay, so these are costs that are necessary for you to produce whatever you're selling and to actually deliver it and sell it to your customer. Okay, so typical example, like as we mentioned, there is the software fees. So let's say for example you're a graphic designer, right? So you have your normal software that you use for your business administration and stuff. You put that under expenses. But if you have software that you use specifically for client projects, for you to deliver a design for a client, for you to design something, be it a logo, be it a pamphlet or brochure, like whatever it is, that software, if you use it exclusively to produce client products, then that is the software fee would be your cost of goods sold. Okay, This is also referred to as cost of sales. But if you're not sure what it is that you should put here under cost of sales or cost of goods sold, then you can do some research specifically for your niche or industry that you're in. Then you'll be able to find out what you're supposed to put here. Okay, right. So the rest of these are just examples here that we put, and then to see it in practice, I'm just gonna put in the figures as well. So let's say this is okay. So we have our total, our cost of goods sold right here. Okay, again, whatever you put in this column is going to be summed up. Whatever you put in this column, this is going to be summed up here. We only have 400 from here because there's nothing else in this columns, right? So you have your cost of goods sold. So from here, from these figures that we put in, if this were like realistic figures, then we could see from this, like we can be confident that okay, at least our business is bringing in something. What we are trying to do here is actually profitable. But then this is not the end of it, right? This is not the final metric for us to celebrate and say okay, our business is making money, because there are other things that are involved to make your business function, right? So we're gonna go to the other costs that are involved in you, like in your business being a business, in it running altogether. So we go to the expenses section. Now expenses, they are not directly linked to production, okay, but these are costs that they contribute to your business functioning. So these are administrative, utility kind of expenses. I'm not giving the I'm not doing that's not a definition that I gave you. Just giving you like an understanding of what it is. But if you want the full definition, again, you can research online. You'll get a full definition of what that is. So the examples of expenses would be your rent, utilities like electricity and water, security, stationery, internet, phone. These are things that you need for your business to run. Okay, so rent is usually one of those expenses, high expenses. So I'm just gonna put in the figures and then we'll look at the total. Let's say for some reason, okay, don't really worry about the figures I'm putting in. I'm just trying to make this illustration. So if an expense doesn't make sense, don't really be alarmed. Okay, let's just fill everything up here. Okay, so now we have the total expenses, right? We filled everything up. We have the total expenses, right? So immediately when you have your gross profit and your total expenses, the difference there would be your operating profit or loss. So in this scenario, I'm just gonna say profit because we can see that is a profit, so I'm not gonna use loss in the terminology going forward, right? So this operating profit is also referred to as earnings before interest and tax. Okay, so if you are a business where you're not really interested or you don't have any expenses related to, you don't have any income or expense related to interest, you can simply delete the rest of this part. If you are not interested, you can delete the rest of these rows. So your last line item would be the operating profit. But if this is your last line item, then you're gonna rename this to net profit. It's not gonna be operating profit anymore. You name it net profit or net income. Okay, net income is usually used for those corporate setting reporting, but for like our small businesses, and also if you're just trying to present this to your management, then net profit Okay, but if you do need this section, or if you have the information that is required, then let's proceed. Okay, so your interest income, I'm just gonna put this at 200. So what is interest income? Interest income is like earnings that you get from, let's say you have a notice deposit account for your business. The interest that it's earning is interest income. Or maybe you lend money to somebody, like an individual or a business, through your business. Now the interest that you earn on that lending would be your interest income. There are other items that you can put here, but for more detail you can look that up. If you are like, you have something specific that you're wondering if it goes here, then you can look that up. Just understand that what you put here, as you in, like what you put down here, we cannot put interest income as like up there on revenue, because this is not income that is derived from your business activities. This is just something that it's a benefit that you're getting from holding some money in your hands or lending money to somebody. Okay, so after you add that interest income, we arrive at the profit before interest expense, which is this figure here. So the interest expense, like we do with other expenses, we have to actually deduct it from your total earnings, right? Or your income. So what is interest expense? So this would be sort of like the reverse of this, but not entirely. Okay, so interest expenses, this is income, sorry, this is an expense or a cost that you incur for borrowing money from somebody or an institution. But in this scenario, we're talking about your business, not in your personal capacity. So let's say that was maybe 500 for the month. Okay, again, if you want to know what specifically to put here, you can do some research. Right, so when you have this amount here, then we have the profit before tax, okay, which is this amount here. So we have estimated tax less, which is what we deduct estimated tax from the profit, right? So here I'm just gonna go ahead and put 3,500. This is just a rough amount that I have in my mind, but obviously I mean, it's not accurate. So what is estimated tax? So this is an amount that the business sets aside as a expense for tax for that specific month. Okay, so remember, transactions, expenses, let's talk about expenses. Expenses are recorded in the month in which they are incurred, not in the month they are paid for. So the estimated tax is an expense. So what it's saying is that, okay, so for this month we incurred tax of 3,500. This is not the actual amount that we paid for it, but we calculated maybe based on a percentage, right? Percentage of the profit before tax. You would know what percentages to use based on like your, like where you do business, where your business is located, where you are located, like the areas that you service. So you would know what percentages to use. But if you don't, like if you actually don't know what percentages to use, you can consult a tax professional or a CPA, or you can do the research on your own. Just consult your local tax authorities. If you're a business owner, mostly you're allowed to get this information on your own and do it by yourself. But I mean, if you don't have the time, then seek a professional, because you don't want to make mistakes. Actually, if you don't want to make mistakes, seek a professional. But also, like, I mean, you also need to know what's going on, right? You can just like give everything to everybody without you understanding what's going on. So that's what I can advise you. So this figure, like I said, is calculated based on a percentage of this amount here. Or what other businesses do is, because what usually happens if you are self-employed, a small business, what usually happens is that you're required to pay your provisional tax on a quarterly basis. So what some businesses do is that they would forecast or estimate how much earnings they're gonna make per quarter, and then from that quarterly earnings estimate, right, what they will then do is that they will calculate a certain percentage of that quarterly earnings they'll calculate a percentage and allocate it to tax, and then they'll split that amount that they came up with by 3. So you're looking at a case where let's say, for example, we estimate that our tax for the quarter is, let's say, $9,000, right? So then they divide that $9,000 by 3 months. So that means that the estimated tax now will be 3,000. It'll be 3,000 across the board for the 3 months. There's no variation. It's just 3,000. You decide how you want to go about it. And so when you deduct the estimated tax, then you have your net profit. So now we can tell that, oh, we actually made money from what we were doing. So let's keep doing it. How do we scale? How do we make more money? So I hope you enjoyed this video. And if you have any information that you need, specific information that you want to know, just write a comment and I'll respond. And if you want a copy of this template, you can utilize the links in the description. And if you also want to refer to the other video, if you want to watch the other video that I'm talking about, where I go through what the steps are for, then I'll also include the link in the description. So yes, that's all from me. I hope you enjoy and thank you for your support. Please like and share and subscribe to this channel. Thank you. Cheers.